Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Zero DTE Options Trading Strategy. Brought to you by me, the Stock Options Hero. Oh yeah, let's leap into it. All right, so continuing on our Zero DTE Option Trading Strategy month, basically 30 trading days of trading exclusively Zero DTE option strategy. Before I hit record on this video, I put on the 4165 bear call spread. At the time, it was like a 16 delta. So 4165, 4170. Oh, yeah. I left some money on the table. Let's double check what I was filled at. Oh, okay. I put the limit at 70 cents, but I got filled at 85 cents. So even better. I thought perhaps I was filled at 70 cents and left quite a bit of money on the table, but that's all right. I will take price improvement like that of 15 cents. So once again, my short strike I'm looking at is the 4165. Okay. The reason I sold the bear call spread is mainly looking at the intraday chart. The daily time frame, however, looks like we may trade higher tomorrow, but I'm not overly concerned with tomorrow's trading day I'm only interested in today's trading day. So SPX opened at 41.55. It traded lower, kind of bounced around. It's been trying to break above the open. It hasn't been very successful all day long. And we've got about 2 hours and 15 minutes left in the trading day. So most likely, SPX, my guess, will probably close around 41.45, 41.50, thereabout. Just a pure speculative guess on my part. But looking at the intraday chart of the 5-day, 5-minute, we've got stochastic crossing to the downside. So if you look at what the price did each time that SPX, what did SPX do when the stochastic and the MACD crossed in the overbought region? So today, this probably would have been the best entry. I missed it, which ended up being all right because I got in here, luckily, right? So I actually got a better price for being a little more patient and missing this entry. But technically speaking, using the MACD and stochastic as your entry and exit technical indicators, this candle would have been an ideal entry point. So I'm happy with my entry on this candle, the 1135 candle. So what I need to happen is for SPX to close below 41.65. Now, what I'm going to do is wait for SPX to hopefully trade lower and wait for the stochastic to look like this, or even better, look like this intraday, and then enter in a bull put spread so that I've manually legged in to an iron condor. So just looking historically from today's chart, I could have written a bear call spread on this candle right here on my 915, and then I could have put on a bull put spread probably on the 955 candle. We didn't quite get a bullish engulfing candle here, so that would not have been an ideal entry. You want to receive confirmation on your candlestick prior to pulling the trigger on the trade, right? So I jumped the gun over here a little bit. It looked like I was going to get a bearish engulfing candlestick. So I pulled the trigger early. I still feel pretty safe on this entry. Could it run higher? Yeah, but most likely I really don't see SPX closing above 41.65. If it runs up and touches, it will most likely sell off prior to the close. So, yeah, so you could have legged into an iron condor. So, bear call spread entry, bull put spread entry. And the cool thing about legging into an iron condor is that you get it. An iron condor only uses one of the legs for your buying power reduction, and you receive additional credit from having two credit spreads, right? So let me just show you as an example. Purely using the delta for my entry, we could sell the 41.35, buy the 41.30. We're already in the 41.65, 41.70 bear call spread. But if we were to leg into the 41.35, 41.30 bull put spread, we take in a 55-cent credit. You'll notice how the buying power effect is 0, right? So let's just say we do 10 contracts at, I think we can get 60 cents for it. So no buying power reduction, and we're taking in a $600 credit, right? So it's pretty sweet if you think about it. It's not costing us anything additional in buying power other than your commissions, right? So even after commissions, I'm still receiving $576.60 in credit. Now, it's not an ideal time to put on this bull put spread. So let's look for, where is 41.35 on the chart? It's right here. It's well within today's trading range. As a rule, I prefer it to be below the intraday support level, which I would put it below the lowest point. So we'll say 41.30, right? So 41.30 and probably look at a 41.20. So, okay, 41.20, 41.15. It's only trading at a 15-cent credit. So risk 485 to make 15. No. I realize this doesn't have buying power effect reduction, but even if you do 15 divided by 485, that's 3%. That's well below my 10% minimum. So what you could do is bump this up to 60 cents, right? So say, for example, you're not able to watch intraday. You've got to step away from your desk, your phone, whatever. You're not able to watch it. You could always put on a open limit order to put on that spread. If the price gets hit intraday, now I have no idea what the probability would be, but, sorry, oops, wrong direction. So 10 contracts, taking 600, risk 4,400. We'll send that off. Once again, 41.20 was my short strike. So as long as SPX closes above 41.20, once the order fills, of course, until then, if it doesn't fill, then there's no risk on that trade. But I'm expecting SPX to sell off, probably down to around 41.40, at which point, hopefully, we'll get a fill. And then it has to continue selling off and close below 41.20 for us to take MAC loss on it. So the cool thing about the iron condor is only one leg will ever expire in the money, and you're oftentimes doubling your credit received. That's if you leg in. If I were to place the iron condor at the same time when I wanted to enter a bear call spread, the bear call spread would be more valuable. Like the short call would be more juicy, but the bull put short strike would be very inexpensive. So you wouldn't get much credit on that. So I prefer to leg in to the iron condor if I can, right? So you can see that SPX is just kind of channeling sideways. It looks like bears are in control on this candle right here. So yeah, looks like it's topping out. So I'm feeling good about my bear call spread at 41.65. My bull put spread at the 41.20, 41.15 should hopefully fill within the next 20, 30 minutes. And I just want SPX to stay between 41.65 and 41.20. If it does, then I will receive 850 plus 600, right? So 850 plus 600 before commissions. I will have made 1450 on today's SPX 0 DTE Iron Condor or Iron Condor manual legging into it. So 1450 on risking 5,000 because once again, your only buying power is being reduced by one of the legs, right? So I like the idea of legging into an iron condor if you can, but so we do have a bearish engulfing candle, which tells me SPX is going to sell off probably to a previous support level. So maybe 41.50, 41.48. But most likely, my guess is around 41.40. And MACD is crossing. So remember, stochastic leads MACD. So hopefully, we'll get our bull put limit reached and filled. And then we would have successfully legged into an iron condor. And as long as SPX stays range bound, in between 41.65, 41.20, we'll make 14.50 today. So not too shabby. And so 14.50, risking 5,000, that's 29% return on your money for a high probability trade of about, I would put it around 80% probability of expiring out of the money. I will take that trade every day, assuming the technicals and support resistance levels look like those price levels are without or not even close to being hit, unless there's major run-up or sell-off intraday, which it looks like SPX is trading in a fairly tight range for the day. We only have about 2 hours left in the trading day, so pretty comfortable with the entries on today's trades. So that's it. Thanks for watching. Make sure you like, share, and subscribe, and watch all my videos to see how much I'm going to make trading the 0 DTE option trading strategy over the next 30 days. And you can learn how to paper trade this strategy by watching my videos so that you too can be a successful option trading hero like me. Oh yeah, let's be option trading heroes together. Once again, thanks for watching and happy trading.